This is why I'm not worried about the massive capex that the hyperscalers are doing. And this is why you shouldn't be worried too. Like in my previous video, we talked about the characteristics of great companies, right? Companies that generate a lot of cash, have strong management, and they have a low debt, or they have more cash than debt on their balance sheets, right? And the reason why I don't think we should be worried about these companies, right, is because these companies, yes, they are investing a lot of their capital in this AI build out for these data centers, because they're saying that they're seeing this demand, and I believe it. I'm invested in all four of these companies, and I believe that the management is making the right decision in this investment. Um, my thing is, let's say, for example, let's say AI is not what we think it is, the demand disappears, and they just spent all this money for nothing, right? And that doesn't destroy their business models. That's what we have to remember. It won't destroy their business models. Their business models are going to continue to generate billions of dollars. And as long as they don't go completely out of control when it comes to raising debt, raising their debt for this build out, is not going to be a problem, because we have a great example. Meta just spent $80 billion with their Meta Quest, with their virtual world there, and they never booked a profit off of that, and they spent $80 billion. Of course, if they could go back in time, and could they you know use that $80 billion to for investments that would have given them a better return, yes, but their business still strive. They did great, even though they wasted $80 billion, and we really don't even know if they're giving up. I think he didn't make it seem like they're not going to continue, but who knows, they might come back to it at a later time. But maybe they're just they're making it a priority to concentrate on AI, because they see better opportunity in AI. But we could, I think it's safe to say that for right now, with what we know, is that Meta spent $80 billion on this, world, and it was a complete, for right now, it was a failure, but the business still did great. At times, yes, we did see at one point when they had that major pivot, the stock, took a little, fell a little bit, but the overall, where's the stock now? So I see this as a massive buying opportunity, as the market being a little bit nervous about these things, because at the end of the day, these guys' business models, Amazon, Alphabet, Microsoft, and Meta, their business models is not gonna die or live because of this AI build out. Yes, they're spending a lot of money, but they're generating so much more. They're generating so much money, and that's why I love that I'm buying these companies here, because, like I always preach to you guys, that we should always remain long term. I believe that these companies are going to be way, way, way higher in the next 5 to 10 years. I am okay with them spending, as long as their core business doesn't live or die by this build out. A company that is more riskier, in my opinion, or like the tier, the guys who are investing into this AI stuff, that they don't generate a lot of cash flow like these companies. Like Oracle is a great example. I'm invested in Oracle, and I would tell you that's one of the riskier stocks that I have, because if this AI thing doesn't, plan out how they see it, you could look and see that they have, their debt has, gone up quite significantly. They're not in any danger or anything like that of defaulting on their debt, but their free cash flow wasn't, like Amazon. It wasn't like Alphabet, close to $100 billion in free cash flow. Meta generating a ridiculous amount of free cash flow. They were generating anywhere from $10 to $13 billion in free cash flow. So it was anybody is it, if there's anybody who's really at risk here, is not going to be your hyperscaler. It's not going to be your Amazon, your Alphabet, your Microsoft, your Meta. They're not going to be, their business is gonna could take a bad hit. Is the businesses who are raising a lot of debt, or the guys who don't have the revenue to back up what AI. That's why you see OpenAI is, if any bad news comes out, if they basically got to walk on eggshells, because if anything bad happens, and if you have any business with um open AI, your stock is going to take it. If they have any bad news at all, even if it's not real, your stock is going to feel it, because you're more at risk. Stocks like Microsoft are not at risk. They're really not at risk. If they fail with the AI built out, it is what it is, you know. They'll be all right. Their business is not going to die. So that's why I think, the massive CapEx spending shouldn't be, if you're a long-term investor, you shouldn't care. You know the characteristics of a good company. You trust the management team. The management team kind of did something, very similar to when they did their cloud build out. However, their cloud build out was nowhere close to these numbers, right? There was nowhere close to these numbers. But I think it's okay to buy at these, you know, on the overreaction by the market, because these businesses are going to be fine. If AI plans out, it plans out. If it doesn't, it was a bad bet. We still generate $50 billion in free cash flow. We still have more cash than debt, which is going to continue on to the next bet, right? So that's just my opinion on why I'm buying these companies. And I would understand why other people are buying it, because, if you're a long term investor, it's completely fine investing in companies like this. So that's my opinion, guys. Thank you for listening. Thank you for coming back to the channel. Like and subscribe. I'll see you guys for the next one.